You know that feeling, right? Staring at a chart, just lines and bars everywhere, and it feels like static almost.
Oh, yeah,
Like the market's trying to tell you something important, but it's just buried under all this chatter.
absolutely. Information overload, it's just constant these days, isn't it?
Yeah.
And, traditional charts, they're tied to the clock. Sometimes that makes it really hard to see the real significant price moves.
Exactly.
Uh,
So what if there was a tool that just ignored all that noise, that only showed you the price action that, actually matters?
uh, well, that's what we're diving into today.
Okay, we're talking about Renko charting.
Yep, Renko. It's this unique technical analysis tool originally from Japan. It actually gets its name from ranga, the Japanese word for bricks.
Bricks, okay.
And you see why immediately. The chart is literally made of these little uniform bricks.
And here's the key thing, right? The really core concept up front. Ranker charts are driven purely by price, not by time. So forget your 5-minute candles, your daily bars, whatever. A new brick only shows up on a Renko chart when the price moves a specific fixed amount.
Uh-huh. That fixed amount they call the brick size.
Right. And that's the magic, isn't it? By setting that minimum move,
Yeah, the threshold.
it just filters out all those little insignificant wiggles,
Well,
the noise.
Exactly. It cuts right through it. Gets you closer to the underlying signal.
So our mission for this deep dive, using the source material you provided, is to really unpack Renko.
Right.
We want to pull out the key insights, understand how it works, figure out, when it's best to use it, and maybe just as importantly, when not to use it.
Yeah, knowing the limitations is crucial.
So by the end, you should have a really solid, informed handle on this whole approach.
Okay, let's get into the mechanics then. So, like you said, the absolute fundamental thing is it's price-driven.
Right.
Not like time-based charts that plot price over, say, every 5 minutes or every hour. Renko only moves forward when the price itself moves enough to make a new brick.
So there's no actual time axis on the chart itself.
None. It doesn't factor in. It's all about how much the price moved.
Okay. Makes sense. Only the magnitude counts.
Precisely. So how do these bricks actually get drawn? Well, a bullish brick, that's an up-moving one, gets drawn when the price goes up by exactly that brick size you set.
Okay.
And a bearish brick, a down one, forms when the price drops by that same fixed amount.
And they're always the same size.
Always uniform in size, yeah. And usually they're colored or filled differently. Maybe green for up, red for down, or sometimes hollow and filled, just to make it easy to see the direction.
Got it. So if I set my brick size at, let's say 50 rupees,
Okay.
an up brick won't even appear until the price actually climbs a full 50 rupees from where the last brick formed. And same for down, it needs to drop 50.
Exactly. Anything less than that 50 rupee move, it's just invisible on the Renko chart. Ignored.
Which, okay, immediately brings up the big question. How do you pick that brick size? It sounds critical.
It absolutely is. And the sources we looked at highlight two main ways to do it. The first one is just using a fixed value.
Like picking a number.
Yeah, you decide on a specific price amount, like your 50 rupees. And that number, ideally, should match the asset's typical volatility and also your trading style, your time frame.
Okay, can you give an example? Like for Indian stocks, how would you choose?
Sure. So if you're looking at a really volatile Indian stock, one that swings around a lot, you might need a bigger brick size, maybe 85 rupees, just so you're not getting tons of tiny, meaningless bricks all the time.
Right, filtering more noise.
Exactly. But for a less volatile stock, maybe something steadier, a smaller size like 20 rupees, might capture the important moves better.
Okay.
The sources mentioned a kind of general range, maybe 20 up to 170, but it really depends on the stock's price level and its specific volatility.
So something high price like Reliance, trading around maybe 3,000 rupees.
Yeah, for something like that, a 20 brick might be too small, generate too much noise. You might look at, say, 30 or maybe even 60 per brick. It needs to be sort of proportional.
That makes sense. You want the brick to actually mean something for that specific stock. So what's the other method?
The second way, and this is apparently quite effective for markets where volatility changes a lot, like Forex or crypto,
Okay.
is using the average true range, the ATR.
ATR, right. I've heard of that.
Yeah, so this makes the brick size dynamic. It adjusts automatically based on how volatile the market has been recently. A common setting people use is the 14-period ATR.
So how does that work if the 14-period ATR comes out to, say, 40 rupees for a stock?
Then you'd set your brick size to 40 rupees,
Yeah.
or maybe a multiple of it, like 1 times ATR or even 2 times ATR.
Okay.
The idea is if the market suddenly gets way more choppy and volatile, the APR value goes up.
And your brick size automatically gets bigger, too.
Exactly. So it keeps filtering noise relative to the current market conditions. Or sometimes, if the ATR is given as a percentage, like say 0.5% of the current price, you might just set the brick size to be 0.5% of the price.
Okay, wow. So picking that brick size fixed or ATR base that's clearly like step 0, foundational.
Absolutely critical.
All right, so once you've got that sorted, how did the sources say you actually, put Renko to work most effectively? Where does it really shine?
Okay, the number one thing, the superpower really, that comes through in all the material is Renko's ability to just strip away the noise and show you the underlying trend, like with incredible clarity.
Because it ignores the small stuff.
Exactly, because it only prints a brick on a significant move. When you have a strong trend, you just see these long, clean sequences of bricks, all green going up or all red coming down.
Ah, I can picture that.
It's like, putting on special glasses that just filter out all the market static and make the main direction pop.
Yeah, that makes a lot of sense. Because on a normal chart, even a strong trend can look messy, right? With pullbacks and overlapping bars.
Totally. Renko just smooths all that right out.
So how do you trade that? If you see that clear trend, what's the approach?
Well, the simplest strategy they talk about is just basic trend following.
Okay.
If you've got an established uptrend,
Mm-hmm.
lots of green bricks you might look to buy just after a new green brick forms.
Right. Going with the flow.
Yeah. And the opposite for a downtrend sell after a new red brick appears.
Mm-hmm.
Pretty straightforward.
Okay.
But they also mention a slightly more nuanced approach.
Yeah.
The pullback strategy.
A pullback. How does that work with bricks?
You wait for one or maybe two bricks of the opposite color to appear within the main trend.
Mm.
So in an uptrend, you see mostly green, then maybe one or two red bricks print.
Ah, like a little pause or dip.
Exactly. That signals a minor pullback.
Mm-hmm.
Then you enter in the direction of the main trend buy, in this case, when the next green brick forms.
Oh, interesting. So you're potentially getting a better entry price after that little dip.
That's the idea, yeah. Potentially better timing or price.
Clever. Okay, waiting for the trend to sort of catch its breath. What else? Does Renko play well with other tools?
Definitely. Combining Renko with key price levels and other indicators is something the sources really emphasize.
How so?
Well, because the charts are so much cleaner, things like historical support and resistance levels or maybe pivot points, they often stand out much more clearly. They're not obscured by as much noise.
Right, you can see the levels better.
Yeah. So you can then look to trade breakouts, like when a brick pushes decisively through one of those levels.
Okay.
Or, conversely, you can look for potential reversals if you see the bricks forming but then seem to be like bouncing off or rejecting a key level.
Makes sense. And what about adding things like RSI or moving averages?
Yeah, that's common too. Momentum indicators like RSI or just a simple moving average can really help confirm the signals you're seeing from the bricks.
How would you use a moving average, for example?
A simple 20-period moving average, maybe. You just see if it's sloping in the same direction as the recent bricks. Helps confirm the overall trend bias.
Okay. And RSI?
For RSI, one suggestion was to look for buy signals when the RSI is, say, above 50, indicating bullish momentum,
Right.
but maybe still below 70, so it's not yet considered overbought.
Gotcha.
And volume is mentioned too. Like if you see a new green brick breaking above a resistance level and you see volume picking up at the same time and your RSI is above 50,
That's like multiple confirmations stacking up.
exactly, that confluence makes the signal much stronger, much more reliable according to the sources.
Okay, let's focus a bit more on those breakouts and reversals you mentioned. How does Renko help specifically with those setups?
Right. So for breakouts, you're often looking for those consolidation periods first.
Sideways movement.
Yeah, where you see maybe alternating red and green bricks, but they're stuck in a pretty tight price range. The Renko chart can make this range quite visually clear. Then, when a brick finally forms that breaks decisively above the top of that range, or below the bottom, that's your potential breakout signal. The clean nature of the bricks makes that break stand out.
And you'd want to put a stop loss just outside that range, presumably, like
Yeah.
below the breakout level if you're buying.
Exactly, yeah.
Yeah.
Protect yourself if it snaps back.
Okay. And what about reversals? How do you spot those?
For reversals, you're looking for a clear change in the brick direction after a pretty long established trend.
So after a long run of green bricks, you start seeing red ones appear.
Right. And this becomes particularly interesting if that change happens near a major support or resistance level you've identified.
Context matters.
Hugely.
Yeah.
Or another clue is divergence. Maybe the price is making a new high, a new green brick, but your RSI indicator is making a lower high. That kind of divergence can signal weakening momentum.
Okay.
But here's a really crucial point. The sources stress for reversals. Wait for confirmation. Don't just jump in when the first opposite colored brick appears, because it could just be a temporary pullback, like we discussed earlier. Wait for at least a second brick to form in that new direction.
Ah, okay. Two red bricks after a long green run gives you more confidence it's actually reversing.
Exactly. Adds confirmation that it's likely a genuine shift in momentum, not just a blip.
That makes sense. Patience pays off. Now, this all sounds great, but trying this live first time sounds risky. What about practice?
Oh, absolutely essential. Backtesting and demo trading are non-negotiable with Renko, especially because of that critical brick size setting.
Right, you need to figure out what size works.
Yes, so you need a platform that actually supports Renko charts and lets you customize the brick size. TradingView, MetaTrader are common examples, and some brokers like Zeroda with their Kite platform offer it too.
And you need good data.
You need real-time data for live trading, definitely, for the bricks to form accurately. But for backtesting, you use the platform's historical data. Test different brick sizes, fixed values, different ATR settings on the specific assets you're interested in.
See what would have worked in the past.
Yeah. How sensitive was it? Did a smaller size catch good moves, or was it too noisy? Did a larger size filter noise well, but maybe miss some entries?
Yeah.
You have to experiment.
Find that balance.
Find the balance for that asset in your style. Then, once you have a setting you think works, use a demo account. Practice trading it in real-time market conditions, maybe focusing on those trend following or breakout setups, without risking real money yet.
That testing phase sounds absolutely crucial then.
It really is.
And, tied right into practice is risk management. Can't forget that.
Never. With any trading approach, but maybe especially with Renko. Why? Because, as we said, it waits for that full brick size move.
Right.
Which means it can sometimes lag just a little bit in signaling the exact turning point of a trend. It needs that confirmation move.
So you could be slightly late getting out of a losing trade.
Potentially, yeah. Which makes having stop-loss orders in place absolutely vital. You need that safety net.
How do you set stops with Renko? Any specific techniques mentioned?
A common approach suggested is to place your stop-loss maybe one or two brick sizes away from your entry point.
Okay.
So if you buy after a green brick forms, you might put your stop below the low of the most recent red brick, or simply 1-2 brick sizes below your entry. For sell trades, obviously, 1-2 brick sizes above your entry, or above a recent swing high shown by the bricks.
So if my brick size is, say, 40 rupees again,
Right.
my stop might be 40 or maybe 80 rupees below my entry price on a long trade.
Exactly that kind of calculation.
Yeah,
Provides a defined risk level based on the chart's own structure.
makes sense.
And of course, the golden rule always applies. Don't risk more than a small percentage, like 1-2%, of your total trading capital on any single trade. Position sizing is key, regardless of the charting method.
Absolutely. Okay, so let's try and pull this together based on the sources. When does Renko really perform best? What are the ideal conditions?
Renko really shines, it seems, in specific situations. Number one, strongly trending markets.
Up or down?
Doesn't matter, up or down. Because it filters out that noise, the direction and the strength of the trend just become incredibly clear on the chart.
So, like you mentioned, maybe Indian stocks like Reliance or Tata when they're making sustained moves, or Forex pairs that are clearly trending.
Exactly, those kinds of scenarios. It's also great, apparently, for filtering volatility in markets that are just naturally choppy or noisy.
Like Forex or crypto.
Yeah, think Forex, crypto. Renko can help smooth out those constant minor fluctuations and just highlight the moves that actually have some substance.
And what about trading style?
Given its focus on capturing these more significant moves, it seems best suited for swing trading or maybe even position trading.
So, holding trades for days or weeks rather
There.
than minutes.
Precisely. Aiming to capture larger chunks of a trend, not trying to scalp tiny little profits.
And for breakouts.
Yes, definitely good for spotting breakouts from those consolidation ranges we talked about. The
Right.
clean bricks make the actual break very visually obvious.
So fundamentally, it's for traders who like a cleaner chart, who want to focus purely on price action.
I think that sums it up well. If you find standard charts too noisy or distracting, Renko offers this simplified view focused just on meaningful price changes.
Okay, so if that's when it works well, when should you maybe avoid using Renko? What are the pitfalls?
This is just as important, right? Knowing when not to use it. The big one is choppy, sideways, or range-bound markets.
Why is that?
Because in a market that's just bouncing around without going anywhere, Renko will tend to print frequent alternating bricks. Red, green, back and forth.
Ah, lots of signals, but they don't mean much.
Exactly. It can lead to a ton of false signals, getting chopped up, what traders call whipsaws. You get in, it immediately reverses, stops you out, then maybe goes back the original way. Very frustrating.
So in a sideways market, a regular time-based chart might actually be better to see the range boundaries.
Potentially, yeah. At least you can see the support and resistance of the range more clearly, perhaps.
Okay. And definitely not for scalping, you said.
Absolutely not for short-term scalping. Scalpers need to react to tiny, super fast price changes. Renko, by its very design, ignores those completely until the full brick size is achieved. It's just way too slow and filters out exactly what scalpers are looking for.
Got it. And the time aspect again?
Right. Since there's no time axis, it's totally unsuitable for any strategy that depends on precise timing around, say, specific news events or economic data releases.
You can't correlate the signal to the event time.
No. You don't know when the brick formed, only that the price moved enough to form it.
What about really quiet markets? Low volatility.
Also not ideal. If a market just isn't moving much, Renko might produce very, very few bricks, maybe none at all for long stretches.
So no signals.
Pretty much useless in that scenario. You need some movement for bricks to form.
And we keep coming back to this, but using it without proper testing, especially that brick size.
That seems to be the biggest trap. Using the wrong brick size is almost guaranteed to lead to problems. Too small, you get swamped with noise despite the filtering. Too large, you filter out everything, including the actual valid moves you wanted to catch.
You missed opportunities.
Exactly. So that backtesting, that optimization for your specific asset and time frame, it's just non-negotiable according to these sources.
Okay, so just to wrap up the main points, Renko Charting offers this really powerful way to simplify what can often be pretty overwhelming price charts.
Yeah, it helps you see the trend like the forest by filtering out all those distracting time-based leaves. Gives you a much clearer view of just the pure price movement.
Right, and especially when markets are trending, that ability to cut through the noise, to highlight those key levels and breakouts, that can really enhance your decision-making process.
It seems particularly suited for that kind of environment, yeah. Simplifying the view, focusing on significance.
Okay, so here's a final thought to leave you with after this deep dive. We've talked a lot about how absolutely pivotal setting that right brick size is. You could argue it's the single most important factor for making Renko work effectively.
Definitely seems that way.
So what if you, the listener, actually dedicated some focused time to systematically testing different brick sizes, fixed values, ATR multiples, specifically for an asset that you personally follow or trade?
Like a proper research project on your market.
Exactly. Using historical data on a platform that supports Renko, like TradingView or MT4, what optimal size or what consistent patterns related to brick size might you uncover? Could finding that sweet spot fundamentally change how you approach trading that particular asset?
That's a really interesting angle.
Yeah.
Moving beyond just using default settings and truly customizing it.
Yeah, something to mull over, maybe explore further on your own. It could be a really valuable exercise.